Holy moly, stocks got whacked in about the last 2 hours of trading today. Couple different reasons this could be happening. I've been warning this could happen for the last couple of days or so. We need to talk. Now, I'm going to be upfront and honest with you. I don't know as much as the next guy what's going on right now. Why stocks got obliterated. I mean, the Russell was up 1% at one point today, and it closed down over 1%. The S&P, the NASDAQ, the Dow, all of them obliterated. Tesla stock down over 3%. We were positive at one point today. Okay, we have a lot to unpack. Lots of possible situations that could be going on right now. Some are worse than others. And, you know, we'll break down what the relevance or significance of any of these possibilities could be. Now, we do have data coming out tomorrow morning. That could also be important. But really, long story short, I know you guys are wondering, is the rally over? This was not your typical just slight sell-off. This was an all-out crash-like event. The speed in which this happened is very eye-opening, jaw-dropping, a lot of different adjectives you could use for that. So we're going to go ahead and get into it. If you want to come hedge out your portfolios with us, come join us in the trading community. We had not just one big winner today, but two. We did play the Micron puts to the downside, made those free, held them into earnings, and that was about a $500 gain on a $1,000 initial trade. The trade from last night, $200 into over $4,000. That was the big one, and would all in all, those trades would pay for your cost to be in the trading community, like 18 years. You could raise a kid off of those profits and still break even on the cost of the trading community. So if you guys want to join it, link down below in the description of this video. So, what is going on today in our markets? We don't exactly know, okay? We are getting this news right now, actually, that Citigroup is said to exit distressed debt trading business, and that is hitting the terminal right now. I don't think that is what is causing this downside move in stocks, and a downside move might be a little bit of an understatement. Like, this was a full-on crash-like event that has taken place here, you know, towards the end of the day today. Crash-like event. Now, we don't know what is happening, right? We don't know exactly what is causing this. Couple different things that are floating out there. Number one, this could be some kind of conflict in the Red Sea. That would make some sense, although I don't think the Houthis, the ones that are potentially that we could be in conflict with, I don't think that causes this kind of crash-like event that we've seen. And this is the 5-minute candles on Tesla, just dumped on, right? MU, that's the trade we hit. If you look at the SPY, I know this video is going to be a little bit rougher because, I mean, look at that. I mean, that's very aggressive. Okay, complete 180. We haven't seen anything like this in a while. Stocks have basically been ripping to the upside. This is a sharp reversal. So that could be one reason. Some kind of conflict overseas we don't have the news on right now. Another reason, a little bit less, you know, bad, I guess you would say, is simple profit taking. We've rallied so much that we've hit this point where some investors started to take profits, and then we got a lot of traders coming in that are taking this advantage, taking this opportunity. Maybe I shouldn't say advantage because I think the rally we've seen is fundamentally justified. But taking this chance to say, hey, we're going to ride this momentum. Stocks are finally falling. We're going to ride that. That's probably what is happening today, but the pace in which this aggressive move is happening, it seems like maybe something deeper is going on. But that definitely has a role to play nonetheless. So that is going on. We are getting this news as well. This says U.S. troops warned of imminent attack. This came out about 1 hour ago as well. And it's, yeah, the Houthis, the Houthi leader warned the Washington, I don't know what the Washington is, against escalating the situation in the region. It says we will control or conduct patrols. It says we will not stand idly by if Americans are tempted to escalate further and commit foolishness by targeting our country or waging war against it. Houthis said any American targeting of our country will be targeted by us, and we will make American battleships, interest, and navigation a target for our missiles, drones, and military operations. This could be it. Okay, this could have some role to play, and then maybe you're getting just profit taking on top of that. It seems like nobody really knows anything. And if you're on Robinhood, well, this is what it looked like today. Very aggressive to the downside. Now, Gary Black, he says everything took a dive starting an hour ago. Nvidia and PanW charts look just like Tesla. 10-year treasury still falling. Could be profit taking. So that's what he is going with here. That could make some sense. 10-year treasury yields continue to fall. That's what is so interesting about this, because we really want to look and see what other things are doing out there, right? Stocks are just one part of the equation. Oil. Theoretically, if we were seeing some kind of conflict over in Yemen with the Houthis or someone else in that region that is causing this aggressive down move, you'd probably see oil going higher. That's not exactly happening, okay? And if we look at TLT, TLT is moving higher. Now, this is what you would expect to see during a fear move. And if you look at the 5-minute candles, it seems like about the same time the market started dumping, investors started putting their money into TLT. TLT, or treasuries, are seen as a safe haven asset. So safe haven asset would be like gold, treasuries, cash. Definitely seeing a migration into TLT, which makes me a little bit concerned. Usually if you see a sell-off in stocks and a rally in bonds at the same time, it's usually a sign of something deeper going on under the surface. Now, odds are someone somewhere does know something. These big money investors, they get information before we do. Now, I will tell you though, I've seen a lot of different volatile moves like this in the past that have meant absolutely nothing. Stocks start cratering and bonds start rallying, and it ultimately that there was nothing, right? But right now, we've been up 10 days in a row, and you flip the switch like that, makes me, scratch my head a little bit. Let's pull up the dollar, give this chart a little bit of a refresher. The dollar was up about 0.2% today. So that is a little bit of a risk-on move. Usually the dollar should do well if there is some fear out there, just because people would want to own the dollar over other foreign currencies. Gold is down about 0.5%. I think that's a pretty good sign if you're looking for something going wrong here. Gold not going higher would be good. But really, bonds going higher as markets are falling, not a great sign. What also could be happening is maybe the market makers got the data for tomorrow and are hedging for this. This happens quite a bit. The Fed Powell confirmed himself that the Fed gets data before it's released. Systemically important institutions probably get the data as well before it's released to the general public. This is to keep likely markets functioning as normal. Now that's my speculation. There's obviously no way to prove that. That seems logical to me. So tomorrow's data is the GDP growth rate quarter over quarter, final numbers for Q3. Based on this move that we're seeing right now, if this is because of the data tomorrow, your GDP growth rate would have to come in very low. maybe 4%, maybe 3% in that range. You're expected to see this GDP report at 5.2%. Now, if GDP did come in really low, I would expect a big sell-off in stocks. Because right now, stocks have been rallying because we're expecting 6, potentially 7 rate cuts next year and no recession. If you get GDP or this data report or that data report that shows the economy is maybe weakening faster than what we think, that could, or would, I should say, not could, that would send stocks lower because your odds of a recession would rise, let's say if the GDP report did come in really low for tomorrow. This is the final reading for Q3. I still think we're probably going to come in around 5%, maybe in the high 4s. So I'm not expecting a big collapse of GDP, but it is possible. Now, you're also going to get initial jobless claims, Philadelphia Fed manufacturing, continuing jobless claims, Philly Fed business conditions, CapEx, Fed employment, Philly Fed new orders, Philly Fed prices paid. This is soft data from the Philly Fed, from the Kansas Fed, but put it together, you can kind of paint a narrative of what's going on. So Philly Fed prices paid will be important, as well as new orders. You will get Kansas Fed Composite Index, Kansas Fed Manufacturing Index as well. So these data reports will be important. You'll also get the inflation rate out of Japan coming tomorrow at 6:30 p.m. So let's go over these things again. Either we could see a conflict overseas that is happening right now. We could see the markets anticipating, maybe the market makers anticipating a bad data report coming tomorrow. Maybe it's just traders that jumped in, started taking profits, and it's a self-fulfilling prophecy that you just continue to see profit taking and shorting, and that could certainly cause very volatile movements, although I don't think that's the whole story. So that's kind of the 3 things that I would expect that could be causing or could have caused this big downside movement that we've seen in our markets today. Now let's discuss what could be ahead for Tesla. Now I'll say it right off the bat. I don't think this rally is over for specific sectors. Small mid-cap stocks, interest rate sensitive names, aka Tesla. I think Tesla can continue to rally from here, although I've been warning about a cool down for the indexes for a while now. Now, good news is the aggressive down move that we've seen today is now causing the S&P, the SPY, to be under 70. So you went from literally earlier in the day today at 82 on the RSI down to 69. That is the largest drop in RSI I have ever seen ever in a single day. Literally, I've never seen a drop that large before. And that just shows the relative strength. RSI stands for Relative Strength Index. The relative strength, the floor fell out from under us. And that's why I think a lot of people are confused, trying to figure out what is going on out there. And again, it could be something more sinister. It could be nothing. Literally could be nothing. We have no idea. We haven't had any news. Maybe at some point tonight or tomorrow, we figure out. But I do think stocks like a Tesla can continue to go higher as capital comes off the sidelines from, cash back into interest rate sensitive areas like a Tesla. We do still have a couple earnings. Like I said, Micron reported today in after hours, BlackBerry, and then you do have Paychex, CarMax, Cintas, and Carnival that report tomorrow morning, and Nike's going to be another big one that reports tomorrow in after hours. Total option activity in Tesla stock today, definitely on the elevated side. You've seen 861 orders totaling $3.09 billion with a positive order value of 45%. Even though you did see this negative narrative really take hold, volume today was 57% to the calls and 43% to the put side, which is kind of ironic. Gavin on X said, such a slow news day in the market today. Feels very weird. And then boom, all hell started to break loose. Bloomberg says U.S. consumer confidence rose in December by the most since early 2021 as Americans grew more upbeat about the labor market and the inflation outlook. Morgan Stanley says inflation is trending down, but recent soft readings are exaggerated. We expect firmer prints ahead and 2.4% core PCE for 2024. The pattern would stand at odds with the market implied expectation for a rate cut in March. We continue to see the first cut in June. And investors feel strongly about bonds. It has been a decade and more since the last investors were this bullish. And as you can see, the net flows into bonds have really started to pick up here in December, whereas a lot of investors have been selling bonds for a very long time. Typically, they sell a lot of bonds besides a lot of moments of fear. Like you've seen in 08, 09, this was a big fear moment. Right now is just a more normalization moment, I think, because interest rates, came down during that time from 5.25% in June of 07 down to basically 0% by 2009, really mid 2008. We're expecting to see something similar now, so you're seeing this. I think it's very easy to make the reference that look what happened then, look what's happening now. That means stocks need to fall. I think that would be a drastic over comparison. Yardini says, quote, housing's hard landing is probably over now that mortgage rates have tumbled by more than 100 basis points. The rolling recession in the industry is turning into a rolling recovery that increases the odds that the economy-wide GATA recession will be a no-show in 2024. The Short Bear reports investment papers are increasingly discussing the bullish argument that money market funds will provide a steady bid for the market to rise. As of the latest data, the money parked in money market funds stands at almost $6 trillion. This is one of the core reasons why I think Tesla will really outperform next year. There's a lot of money on the sidelines, and there's a lot of investors that are severely underallocated to stocks. I think with rates dropping 6, maybe 7%, or 6 rate cuts or 7 rate cuts, 7 rate cuts being more priced in than 5 rate cuts, so we're definitely on the higher end of 6 rate cuts. That means you have to get back into stocks in some form or another. And Tesla looks like the best place to be, just using a little bit of common knowledge on how markets work. Seth Golden points out something interesting. He says, if you've been monitoring VIX futures today, you would have recognized a little something different in store for stocks today than since the October lows. But what do I know? First day and all. Part of Crash Up Playbook. A little bit interesting. VIX futures kind of all day today were going higher, and then you did start to get this crash event that really sent them up, way higher. But you were getting a rally in VIX futures for a while here. Who knows? Maybe it's the data coming out tomorrow. Maybe it's just profit taking. Maybe it is something more sinister than that taking place under the surface. Maybe it's a actual credit downgrade coming for the U.S. economy by Moody's, something along those lines. Who knows is the point. The only thing that you know is how to prepare your portfolios. If you're concerned, probably rightfully so, stocks have rallied a lot. This was a rug pull by market makers, by market individuals that sent, the Russell up 1% to crash down 1% in literally like 30 minutes, an hour. If you're scared, some would say go to church. I would say buy some puts on your portfolio, because, that's the only way to protect your portfolio, unless you just absolutely sell out, in which I think there is way too much upside for that to be a realistic choice here. Fed Harkin also said today that the economy appears to be slowing faster than the data suggest. We went over that in the last video, what Fed Harkin said. That was word for word what Harkin said. The economy appears like it's slowing faster than the data is suggesting. Well, take a look at this, because this is what bond markets are pricing in. After today's wicked sell-off, you're still pricing in 1, 2, 3, 4, 5, 6 rate cuts in 2024. But check this out, and you're actually pretty stable from yesterday, pricing in 6 rate cuts. The percentage really hasn't moved too much. It's actually dropped from 37.3% down to 37.1% today. So it's actually fallen a little bit. But take a look at this. So your odds of 7 rate cuts have went from 23.2% yesterday to 31.6% today. That's a huge jump. That's a almost 9% jump in the odds of 7 rate cuts next year. That typically happens when you get data or you get some form of news, not just random day. Take a look at this. The odds of 8 rate cuts went from 2.5% yesterday to 6.8% today. The odds of 9 rate cuts went from 0% yesterday to 0.4% today. 8 rate cuts, let's just call it that. 8 rate cuts would be a rate cut at every Fed meeting after January, and 1 meeting giving you a 50 basis point rate cut. 7 rate cuts, which is almost the most likely outcome as per the Fed futures, as per the bond market. That would be a rate cut at every single Fed meeting after January. That would be a rate cut in March, May, June, July, September, November, and December. So yeah, you're starting to get to the point where you really have to question why the markets are pricing in so many cuts. Are the markets starting to price in so many cuts because the economy is weakening at a rapid degree? I don't know. We will know that answer a little bit clearer coming tomorrow, and then coming on Friday when we get personal spending, we get retail sales as well as PCE and personal income. We're going to get a lot more information over the next 48 hours. But right now, this is kind of telling you something. Seems like maybe not a bad time to get a hedge or two, but I'm still pretty confident that certain stocks have higher to run from here, including stocks like Tesla. And I still remain, firm that Tesla could potentially even hit, new, highs for 2023, $300+ by the start of this next year, 2024. Maybe by the end of this year. I guess it really depends on how the next couple of days go, how the next, period of time goes, the next week or two, and really see. But yeah, I mean, wow, what a day this has turned into. Tesla stock down 4% to close out the trading day. Holy moly. And still, here in after hours, not getting any specific news. So yeah, definitely a strange one. Let me know what you guys think about this down below in the comment section. What do you think is going on today? That's going to do it. If you guys want to come hedge out your portfolios, come get some protection, come trade the upside, the downside, sideways, whatever happens, check out that link down below in the description of this video. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.